Most business owners think tax season is about scrambling to file paperwork and hoping they don't owe. But by then, it's already too late. The truth, businesses that pay the least in taxes aren't cheating the system. They're just using strategies the majority overlook. I'm Trevor Densmore, the founder of TJD Accounting Tax. And for over a decade, I've been helping businesses across the country legally reduce their tax bill, not with loopholes, but with strategy. In this video, I'm breaking down 7 strategies that most accountants won't talk about, but the top 1% quietly use every year to keep more of what they earn. These aren't trendy hacks. They're IRS-approved, underutilized, and extremely effective when done right. So let's get into it. Our first strategy is a foundation level move that can save you thousands in a single year. 1. S-Corp election. This is a simple switch from a sole proprietor or LLC to a S-corporation for tax purposes. Many businesses avoid this election because it requires more paperwork and there's a slightly different setup process. The reason why this is an effective strategy is because as a sole proprietor or LLC, you are subject to self-employment tax on your business profits. As an S-Corp, you are allowed to split your business profit. So you would pay yourself a reasonable salary, which is subject to payroll taxes, and then the remaining would pass through as a distribution, which is not subject to those payroll taxes or self-employment tax. And for those of you who do not know, self-employment tax is 15.5% of your profit from your business. So this is a completely legal way to significantly lower your self-employment tax. Once you're an S-Corp, the next move is about how do you pay yourself. 2. Strategic salary setting, the reasonable compensation rule. This is the art of finding perfect balance between the salary you pay yourself and the distribution you take. Because it's not a one-size-fits-all number, it requires careful planning. Setting up a high salary would mean that you would overpay in payroll taxes. A low salary can trigger an IRS audit. A strategic salary helps you find that sweet spot that helps you maximize tax efficiency. It helps you minimize your FICA tax burden and help you legally keep more of your business profits. This next one is a personal favorite because it helps you turn a personal expense into a business deduction. 3. The Augusta Rule, the tax-free rental trick. This is a little-known IRS rule. It can be found in Section 280A of the IRS tax code, which allows you to rent your home to your business. Almost no one knows about it, and it sounds too good to be true. How it works is that you're allowed to rent your primary residence for up to 14 days for business purposes such as meetings, workshops, or training. The business gets a tax deduction for the rent expense, while you, as the homeowner, gets the rental income completely tax-free. Now keep in mind, the rent that you charge must be aligned with market rate. It is a simple, legal way for you to shift money from your business to your personal account with a dual tax benefit. Speaking of family, our next strategy is all about them. 4. Hiring your kids, the family tax shelter. This is paying your minor kids to do legitimate work within your business. Many business owners think that this is a red flag, but when done correctly, it's 100% legal and IRS approved. This is an effective strategy because when a parent pays a child who is under 18 up to a wage up to the amount of the standard deduction, that amount is completely tax-free. This allows you to shift a portion of your income from your high tax bracket to your child's low or non-existent tax bracket, also allowing you to fund their college or their Roth IRA. The next tax strategy is a powerful way to turn your business growth into an immediate tax shield. 5. 100% bonus depreciation, the capital investment hack. This guideline allows you to depreciate 100% of a business asset in the first year of purchase. So for example, if you were to go out and buy a business vehicle, instead of claiming that expense over the useful life of the vehicle, say 5 years, you are now able to immediately take the full depreciation in the first year of purchase. Many business owners still believe that this is being phased out, but thanks to the new tax bill signed into law by Donald Trump, 100% bonus depreciation is now permanent. This means new vehicle, new equipment, or even new property improvements, if qualified, can now be 100% deducted in the first year. This turns a business expense into a powerful tax shield, freeing up capital for reinvestment. Our final 2 points are about using a proactive mindset to save. 6. Maxing out our retirement plan, the wealth building deduction. This is when you use business-specific retirement plans such as SEP IRAs or solo 401k. Many business owners just use a simple IRA, not realizing the massive contribution limits to these business-specific plans. You can contribute tens of thousands of dollars to these plans, and those contributions are tax deductible. You build massive personal wealth for your future while simultaneously slashing your business current taxable income. And finally, a simple yet powerful strategy that most business owners completely miss. 7. Proactive home office deduction, the hidden real estate asset. This means going beyond the easy and less effective simplified home office deduction. Many business owners either do not claim this deduction or just use the simplified method, which leaves money on the table. You see, there are 2 ways that you can calculate your home office deduction. The first is the simplified method, which is you take $5 and multiply it by the square footage of your office. The max that you can claim for this is 300 square feet. The second method is the regular method, which allows you to deduct a percentage of your indirect home expenses. This can include mortgage interest / rent, utilities, internet, phone, cell, and even a percentage of property maintenance and improvement. You can also do property taxes and property insurance as well. This is a smarter way to turn personal expenses into business deduction when you have a dedicated, regular, and exclusive workspace. There you have it, 7 tax strategies that the average business owner overlooks. These aren't just clever loopholes or deductions. They're completely legal, IRS-approved moves that can save you tens of thousands if you implement them correctly and at the right time. At TJD Accounting and Tax, we specialize in doing exactly that, helping business owners across the country structure smarter, plan better, and pay less. If your current CPA isn't talking to you about things like the Augusta Rule, reasonable salary strategy, or how to hire your kids and deduct it, they're not planning, they're just filing. Click the first link in the description to book a free call with me and my team. We'll walk through your current setup, pinpoint missed savings, and show you how to start using strategies like these to lower your tax bill this year and every year after. The top 1% didn't wait till tax season to save money, and neither should you.